Okay, today we're going to start with Chapter 9, and you can see the overview here. It's subsidiary ledgers and controlling accounts. We are going to go into a business as a merchandising business rather than a sole proprietorship. In Chapter 9, you'll be introduced to a lot of terms. You can see they're all listed here. We will go through them individually. By the end of the chapter, you should be feeling real comfortable with them. And as you look through them, a number of them should be familiar in your daily routine of listening to news or whatever. So you'll be familiar with some of them will be brand new. Okay, next we're going to take a look at the 3 green products and the chart of accounts that we are going to be using this chapter. And so let's go. I'm going to just take you into the book real quick here. See how quick I can get this up here. And we'll take a look at that. So we're going to be in part 2 of our book. And we're going to take a look at the business 3 green products. You can see here for this unit, whenever I go through a lecture, we're going to talk about 3 green, the corporation that we're starting here. It says 3 green products is a business described in part 2. It's a retail merchandising business organized as a corporation. It rents store space in a shopping center. 3 green purchases and sells a wide variety of environmental products from light bulbs to cleaning supplies. Purchases are made directly from a business that manufactures these items. And here's just a little short video here.
Hi, I'm Mary Prissock, owner of 3 Green Incorporated. I've always been passionate about environmental issues and preserving the world around us. So when I bought my own home, I wanted to be sure to use the most eco-friendly products. It just wasn't easy to find them. I spent hours on the internet searching for organic and recycled products and found I had to buy them from multiple retailers. It was frustrating. So I had an idea to open my own store. A one-stop shop for the environmentally conscious consumer. I purchase environmentally safe products directly from manufacturers and resell them. I offer a wide range of products: reusable shopping bags, stainless steel water bottles, organic cleaning products, and items such as clothing and linens made from recyclable materials. I raised capital from a small group of investors and opened a store in a local mall. Each investor owns a share of the business. I plan to be around for a long time, and I hope to pass on my shares of the business on to my children someday.
Okay, that's just a little summary. If you look here, this is a type of chart of accounts that we're going to be using for 3 green products. And you can see that in the assets section, there are current assets and plant assets, and that'll be explained as we go along. Current assets are the ones that we can change to cash readily. Plant assets take a little bit longer time. Then you'll notice that we have a number of liabilities, and the thing that you'll notice here are the liabilities include taxes. And then we have in our owner's equity, instead of this time, we'll have stockholders' equity. And then we have our income statement account. We have some operating revenue, cost of goods sold, operating expenses, other revenue. Okay, and you can see some of them are familiar, some we'll learn as we go along. And then we also have some subsidiary ledgers that we're going to go over. You can see that we have an accounts receivable ledger and accounts payable ledger, and some of those will be explained in the next chapter or so. Okay, going back to the PowerPoint, we're going to start with Chapter 9 because we've looked at the overview so far. Delgado Web Service, the business in part 1, is a service business. Remember, it sells a service for a fee. Another type of business purchases goods to resell. And that is 3 green products. They are a merchandising business, and then they're going to purchase goods to resell rather than having a service business. Goods that a business purchases to sell are called merchandise. A business that purchases and resells goods is called a merchandising business. A merchandising business that sells to those who consume the goods is called a retail merchandising business. So we consume the goods, they're the ones that sell to us. A wholesale merchandising business buys and resells merchandise primarily to other merchandising business. Some wholesale businesses also sell to individual consumers. So your wholesale merchandising business would sell to probably like Levers. Levers would sell to us as consumers. A lot of terms here, but you'll get the hang of it. Service and merchandising businesses use many of the same accounts. However, a merchandising business have additional accounts in their balance sheet and income statement to account for the purchase of sale of merchandise. Okay, so you're going to see a lot of similarities in the accounts, but again, since we buy and resell merchandise, we have to have accounts for them. Forming a corporation. Many businesses need amount of capital that cannot be easily acquired as a proprietorship. These businesses choose to organize as a corporation. A corporation then is an organization with the legal rights of a person, which many people or other corporations may own. For example, a corporation can own property, incur liabilities, and enter into contracts under its own name. The assets or the other financial resources available to the business are called capital. One way the corporation obtains capital to operate or grow its business is by selling units of ownerships in the company. Each unit of ownership in a corporation is called a share of stock. The owner of one or more shares of stocks is called a stockholder. The total shares of ownership in a corporation are called capital stock. Okay, so for example, if we're going to take a look at a business I'm going to start, I don't have enough money, so I'm going to sell some shares of stock, and I'm going to decide how much I'm going to share or sell them for and so forth. I may have to raise, I'm going to do something real simple, $1,000. I have 10 people that want to invest, and they each want to invest $100. Or you can sell shares. One person might buy one share, one person might buy 5 shares, and so forth. But anyway, each unit of ownership, how I have that broke down, is a share of stock. If individually you buy stock from me, you would be a stockholder. And then the total amount of all the shares in the ownership is my capital stock. A corporation is formed by applying to a state government. The Articles of Incorporation is a legal document that identifies the basic characteristics of the corporation. It is a part of the application submitted to the state to become a corporation. You can't just set it up, you have to get permission. The Articles of Incorporation typically include the name and address of the business, its purpose for operation, any limitations on its activities, if they can do certain things or they can't. There's also rules for dissolving the corporation, what's going to happen to the corporation if the company fails. The Articles of Incorporation also describe how the business is to be governed and how capital is acquired. The state approves the formation of a corporation by issuing a charter. And the charter is the legal right for the business to conduct the operations of a corporation. So you have to get permission. If you don't get permission, you cannot start your corporation. The main difference between the accounting records of a proprietorship and the corporation is in the capital accounts. Proprietors have a single capital and drawing account. That's what we had in the last unit. A corporation has a separate capital account for the stock issued and from the earnings kept in the business. And this will be explained as we go along. But again, we have to keep track of each individual stock that we have in the corporation. Taking a look at this, I'm going to just read through this. The business, Three Greens Products Incorporation. Individuals occasionally see a need for a new product or service, or they believe they can improve a process. But it takes more than a great idea to start a successful business. It requires a passion for the idea. Many of today's well-known businesses were started by individuals who were passionate about their ideas. Thomas Edison had a passion to invent the light bulb, and they started General Electric. As a struggling actor, Danny Thomas made a spiritual promise that he would be fulfilled in a building of St. Jude's Research Hospital. They also had Mary Prizak had always had a passion for saving the environment. She had spent hours surfing the internet to purchase products for her home that were safe for the environment. She grew frustrated with having to purchase a dozen of online retailers. Eventually, she decided to open Three Green Products, and that's the store that we saw earlier in the video. Three Green provides local residents with a wide variety of products that are friendly to the environment. Okay, and the Three Green name was inspired by the three green arrows in the universal recycling symbol. Mary developed a business plan to operate the store from a location in a new shopping center. However, she did not have the capital to launch the business. With the help of a small group of investors, though, Mary was able to form the corporation and open her business. Each investor received a number of shares of stock based on the amount invested. Unlike the proprietorship, a corporation exists independently of its owner. Mary expects Three Green Products to continue beyond her lifetime and plans to give the share of stocks to her children. And again, that's that concept, going concern. Businesses may have several types of ledgers. Sorry about that. The general ledger is a collection of accounts used to assemble similar transactions, such as those that affect cash. General ledger's accounts are used to prepare our financial statements. We use the general ledger to prepare financial statements, such as our income statement and our balance sheet. A business from which merchandise, supplies, or other assets are purchased are called a vendor. So as a business, you purchase from a vendor. Merchandising businesses often purchase merchandise on account from many vendors, so they have many vendor accounts. A business needs to know the amount owed to each vendor to ensure it pays its bill on time. So you have to keep track of each vendor to make sure that you know how much you owe them, just like we did before. Delgado Web Services in business in Part 1 used a general ledger to assemble the transactions with and maintain accounts owed to each vendor. This is not practical for a business having large number of vendors. So with our Delgado Web Services, we usually had like 2 vendors. With a corporation, you might have 10 or 20 different vendors, so it's not real practical just to have a general ledger. This is why most businesses maintain a separate ledger with separate accounts for each vendor. A ledger that summarizes a single general ledger account is called a subsidiary ledger. Accountants often refer to a subsidiary ledger as a subledger. The subsidiary ledger containing vendor accounts is called an accounts payable ledger. Three Green has 6 vendors. Let's go back to this one. An account in a general ledger that summarizes all accounts in a subsidiary ledger is called a controlling account. So let's just take a look at this here. You can see that Three Green has 6 vendors. Burden Chemicals, Estes Supply, the electric, the tools, the imports, and the lighting. You can see those 210, 220, 230, 240, 250, 260. Although any numbering scheme can be used, 3 Green uses 3-digit numbers for its accounts payable ledger. The first digit identifies the division in which the controlling account appears in the general ledger. The next 2 digits are unique to the vendor. Accounts in a subsidiary ledger can be located by either number or by name. For example, the vendor account for Bearden Chemicals is 210. You can see that right there. The first digit, 2, shows that the accounts payable is a liability. Liabilities are in the 200s. The second and third digit, 10, are a unique number assigned to Bearden Chemicals. Okay, so you can see here, you have your accounts payable ledger, and that is that blue book right there. In your accounts payable ledger, you would have your individual vendors, and you can see at any time what those individual vendors owe you. When you add them all up, if you follow the pink line there, if you add up all the vendor totals, you can see on that cash register tape that the total from all your vendors is $19,604.67. This is the total amount that goes in your controlling account, accounts payable. That is the total amount in your accounts payable. And again, your accounts payable is a liability for the total amount from all your vendors. So we will have a separate accounts payable ledger for all of our vendors. Taking a look at our subsidiary ledger form. Accounts payable ledger forms are similar to general ledger forms. The account payable ledger form contains the same columns as the general ledger, except it lacks the debit balance column. Accounts payable have a normal credit balance, so therefore the accounts payable ledger form does not require a debit balance column. So you can see that they have the same column headings up to that point, but your accounts payable ledger only needs a credit balance column because you're probably not going to pay a company more than you owe it. So you shouldn't need the debit balance. If for some reason you would pay too much, then the negative amount would be represented in a number in parentheses. More than likely, they would just send the money back to you. Okay, so on November 1st, 3 Green prepared a new page for Bearden Chemicals in the accounts payable ledger because the existing page was full. On that day, the account balance was $5,483. And so again, it's just showing you how you would transfer the numbers to a new vendor page. So you would write the step number 1, you would write your account title, the account number, 210, which is assigned to it. You would write the date. You would write the word balance because you are transferring this balance from a previous page. You would put a check mark in your post reference because again, it is starting a new page and it's been carried forward from the previous page rather than posted from a journal. And then you would write in the balance of the column. And that covers the first section in Chapter 9. We'll go on to the problems next.